Hey guys, welcome to the 10X Academy. I am your host, JR. Dividend income is one of the 7 main flows of income millionaires use to create wealth. In today's video, I will discuss a simple strategy you can use to create a passive dividend income portfolio. And stay tuned to the end of the video where I will outline a strategy you can use to create monthly passive income from dividend stocks and also provide you with a simple portfolio you can use to start your path toward creating recurring dividend income that grows consistently over time. Dividend income is one of the 7 main flows of income millionaires use to create wealth. Investing in dividend-producing stocks is a great way to create a steady flow of passive income. Through careful planning and diligent investment of capital, as well as reinvestment of dividends, one can create a dividend income stream that can provide substantial income even to cover everyday expenditures. Creating a carefully crafted dividend income portfolio that pays monthly dividends can be a great source of passive income that can not only cover monthly expenditures, but even be a source to cover rent, a mortgage, and even supplement or replace your earned income. I will now go over the criteria necessary to create a monthly dividend producing portfolio. The first criteria to look for is dividend growth. Has the company grown its dividend payouts for the last 10 years or more? An example of a great dividend growth stock is REALTY Income Corp, ticker symbol O. With 23 years of dividend growth, REALTY Income has increased its dividend payout for each of the last 23 years. A great sign of a healthy dividend-paying company that is more likely to continue to not only pay out consistent dividends, but also increase its dividend payments in the foreseeable future. In addition, there is an elite group of 57 stocks that are part of the S&P 500 that have had 25 plus years of consecutive dividend increases, for which REALTY Income will soon be part of. This group is called the Dividend Aristocrats. Some of the companies in this group include T. Rowe Price Group, ticker symbol TROW, Target, ticker symbol TGT, Chevron, ticker symbol CVX, and People's United Financial, ticker symbol PBCT. Another criteria is that the company has paid out dividends consistently for at least 10 years. For example, REALTY Income has been paying out dividends for 25 years. Again, a great example of a consistent dividend-paying company that will continue to pay out dividends into the foreseeable future. The third criteria to look for is the company's payout ratio. Does it have a decent payout ratio, i.e., it's not paying out more dividends than what the company itself is earning in income? And also, does the company keep profit that it can reinvest for expansion and growth? With REALTY Income being a REIT, or Real Estate Investment Trust, there is an exception here for REITs. To qualify as a REIT, a company must have the bulk of its assets and income connected to real estate investment and must distribute at least 90% of its taxable income to shareholders annually in the form of dividends. So REITs tend to have higher payout ratios, sometimes in the 90% range or even higher. For example, REALTY Income has a payout ratio of 85%, which is perfectly fine for a REIT. But typically for non-REITs, you should look for payout ratios of 40% or below. If a company's payout ratio is too high, that is a sign that its dividend may not be sustainable and that dividend payments may be discontinued in the foreseeable future. The fourth criteria I look for is actually a bonus criteria, and that is potential for capital gains. Is there a potential for actual appreciation of the stock over time? This provides a great boost of returns in addition to dividend income and can be a great source of passive income as well. As can be seen below, REALTY Income has appreciated over time, almost 20x within the last 20 years. The fifth criteria is an annualized dividend growth rate of at least 4% over the last 3 to 5 years. This provides an extra padding factor to the dividend and guarantees that the dividend growth will at least be above the annual inflation rate. A great assurance that your return on investment, or ROI, is growing at a steady rate and keeping above the inflation rate. REALTY Income's annualized dividend growth rate for the last 3 years is 5%, which is an excellent growth rate for a REIT dividend stock. The sixth criteria is, does the company have a history of earnings growth over the last 5 years? For this, we want to make sure that the earnings per share, or EPS, has positive growth over time. The earnings growth provides margin of safety, and typically rising EPS can lead to higher dividend payments over time. Realty Income's EPS for the last 5 years is 11.8%, which is a nice safety measure to have in case there's a drop in valuation and the stock price drops. The seventh criteria is a price to earnings ratio or PE ratio of 20 or below. A PE ratio of 20 translates to an earnings yield of 5%. Undervalued purchases can add an extra margin of safety and is great to capture future capital gains, as the market realizes and properly values the company based on its fair price. In our example, Realty Income's PE ratio is actually 54.7, which is extremely high for a dividend stock, even though REITs tend to typically have higher PE ratios. It is common for established real estate companies to trade at 35 to 45 times the forward earnings, due in large part to the fact that REITs are evaluated with different metrics, such as funds from operations, than other types of companies. For Realty Income specifically, it would therefore be wise to wait until the price per share pulls back to a more reasonable level before buying shares of this dividend company. The strategy for creating a monthly dividend income portfolio is simple. Follow the 7 criteria in selecting dividend income stocks and stagger the dividend payment schedules so that when stacked together, the general portfolio pays out monthly dividends. For example, let's take a look at Digital Realty Trust, ticker symbol DLR. DLR pays dividends on the following schedule: 3, 6, 9, 12, or March, June, September, and December. Another REIT, Physicians Realty Trust, ticker symbol DOC, for example, pays on 1, 4, 7, 10, or January, April, July, and October. By stacking a few dividend stocks on each of the schedules, you can cover all of the months of the year and therefore generate dividend income each and every month. For assurance, there are also monthly dividend stocks that can fortify your income each and every month in case some of the dividend stocks slip on their payment by a month, which happens from time to time. Creating a strategy for your dividend income portfolio is key in creating a steady, passive flow of income which can grow over time and become a significant flow of income long term. The following is an example of a monthly dividend income portfolio which meets the 7 criteria mentioned previously in the video. For our portfolio, we have chosen the following based on dividend aristocrats, which are stable companies whose dividend growth is sustained. First quarter payouts, 1, 4, 7, 10. We have Genuine Parts Company, ticker symbol GPC, with a dividend yield of 3%. Next, we have Illinois Tool Works, ticker symbol ITW, with a dividend yield of 2.65%. And then we have Leggett & Platt, ticker symbol LEG, with a dividend yield of 4.22%. For the second quarter payouts, 2, 5, 8, 11, we have AbbVie, ticker symbol ABBV, with a dividend yield of 5.53%. The Clorox Company, CLX, with a dividend yield of 2.71%. And we have General Dynamics, ticker symbol GD, with a dividend yield of 2.35%. Finally, for our third quarter payouts, 3, 6, 9, 12, we have Archer Daniels Midland, ticker symbol ADM, with a dividend yield of 3.54%. We have Consolidated Edison, ticker symbol EDS, with a dividend yield of 3.35%. And we have T. Rowe Price Group, ticker symbol TROW, with a dividend yield of 2.88%. So far, the portfolio pays out monthly, and the 3 schedules cover all of the months of the year. To fortify the portfolio further, we have the following REITs. First, we have Realty Income, ticker symbol O, which pays a monthly dividend and a yearly yield of 3.73%. Next, we have LTC Properties, ticker symbol LTC, which also pays a monthly dividend and a yearly yield of 5.09%. And finally, we have Getty Realty, ticker symbol GTY, which also pays a monthly dividend and a yearly yield of 4.4%. And finally, for diversification, we have the Vanguard High Dividend Yield ETF, ticker symbol VYM, with an average dividend yield of 3.58%. The average dividend yield for the entire portfolio, if we equally weight all of the positions, is 3.62%. Adjusting the weight more toward the higher dividend yielding stocks could increase the dividend yield of the entire portfolio even higher. The resulting dividend portfolio is safe, mostly based on dividend aristocrats, diversified with the ETF, and secures monthly dividend income, which could be used to not only cover day-to-day expenditures, but even supplement your income and eventually replace your income long term. And this is why dividend income is one of the 7 main flows of income the wealthy use to create massive wealth. Be sure to check out the links in the description to get started on creating your own monthly dividend income portfolio and start your path toward financial freedom. Thank you for watching this video. Please subscribe to the channel if you haven't done so already. And oh yeah, smash that like if you enjoy watching videos like this. Thank you and have a great day.